Are you certain your savings are safe? For the past few years, inflation across the Eurozone, driven by the European Central Bank's policies, has been silently eroding your purchasing power. Meanwhile, across the Atlantic, the US debt has shattered records, soaring into the trillions. Can your stock and bond portfolio withstand the instability created by these two economic giants? Today, we will show you why, in the face of this economic storm, holding gold and silver in your portfolio is not just an option, but an essential shield for your financial security. Watch until the end, because we will expose the secret market manipulation that has been artificially suppressing the price of your precious metals. As a European investor, your primary enemy is inflation. Every euro in your account loses value year after year. No matter how the ECB plays with interest rates, the core issue is the fundamental weakness of the global economic structure. Specifically, the policies of the US Federal Reserve and America's unrestrained debt accumulation have placed the entire world economy on a ticking time bomb. The European market is not immune to this instability. When this debt crisis inevitably explodes, traditional assets like stocks, bonds, or even real estate could lose significant value. In this scenario, you need an asset that operates outside the system. This brings us to the most critical question. Why aren't the prices of gold and silver rising as you'd expect? The answer lies in market manipulation. When you look at the price of gold or silver, you are primarily seeing the price of the paper market. Exchanges like COMEX create massive amounts of futures contracts or paper gold without the underlying physical metal to back them. This paper market is so large that it artificially suppresses the demand for physical metal, displaying a false price. But the real story is different. In reality, the demand for physical gold and silver is record-breaking. Large investors and even the world's central banks are secretly accumulating massive quantities of gold. They know the paper market can collapse at any moment. The paper market is an illusion. The true value is hidden in the physical market. There are three main reasons why gold and silver are indispensable for your portfolio. First, as an inflation hedge. Historically, precious metals maintain or increase value when the euro's purchasing power declines. They tend to rise when the value of fiat currency falls. Second, for portfolio diversification. They have a very low correlation with stocks or bonds. They provide stability to your portfolio even when the stock market crashes. Third, for industrial demand, especially silver. Silver is not just a precious metal, it is an industrial metal. Its use in solar panels, electronics, and EVs is increasing. Due to future technological demand, silver's potential for price growth is even higher than gold's. When the stock market crashes, gold and silver keep your portfolio stable. This is the true power of diversification. Now the question is, what will you do? Will you leave your savings at the mercy of this paper market manipulation? No. Your next step should be to invest a small portion of your portfolio, experts typically recommend 5 to 10%, in physical gold or silver. Find trusted and licensed dealers in Europe who can supply you with the physical metal directly. What is your opinion on this? Do you think the paper market will collapse? Share your analysis in the comments. Every comment enriches our discussion. For more in-depth economic analysis and investment tips like this, subscribe to the channel and hit the bell icon. In the next video, we will show you how to buy gold and silver in a tax-efficient way in various European countries. Don't miss it.